can't be like some of these Republicans, many of them in Washington, D.C., that refuse to fight for our values. In Florida, and what Kim has done here in Iowa tells a different story.
We need a president who has the skill and the resolve to reverse the madness that we see every single day. That leader is Ron DeSantis.
It's a shot in the arm for Florida's Ron DeSantis receiving a major endorsement from Iowa Governor Kim Reynolds just as he was losing ground in the polls. The presidential hopeful now returning to Florida with fresh momentum ahead of tomorrow's Republican debate in Miami. Your team coverage starts right now with Bloomberg's Anne-Marie alongside Kelly Lyons in Washington, D.C. AMH, talk to us about the next 24 hours for the GOP.
Well, it's going to be a smaller, condensed stage, Jonathan, tomorrow in Miami, and all eyes are going to be on Governor Ron DeSantis. He's getting potentially a bit of a boost and some love from the governor of Iowa. That endorsement is critical for him. He spent a lot of money and capital in Iowa. He's almost visited every single district in Iowa, which was part of his strategy. But a recent poll by NBC and Des Moines Register also showed that Nikki Haley has caught up to him in Iowa. So all eyes are going to be on these two frontrunners as they take the stage tomorrow. But amongst all of this, Jonathan, poll after poll continues to show the former President Donald Trump is out racing all of them.
A commanding lead. Nikki Haley getting a bit of momentum in the last couple of weeks. Kelly Lyons, it's election day, 12 months from the big one next year.
Yeah, John, usually we don't pay that much attention to off-year elections because they aren't just all that exciting, but these could, this day in particular, send really important signals for 2024. There's a number of key races that we're watching here in Washington, one of them being in Ohio, Issue 1. This is literally abortion on the ballot. We have seen post the fall of Roe versus Wade that abortion is a real turnout driver, especially in special elections in which abortion rights advocates have notched a lot of victories. And once again, if this is indeed cementing abortion rights into the Constitution of what is more and more a red state, it could be a pretty big signal about what's going to drive turnout in the wider election in 2024. Abortion also an issue just across the river from us in Virginia, where both the House of Delegates and State Senate are entirely up for grabs, and this is a real big test for the Republican Governor Glenn Youngkin. He is trying to cement control of the entire state legislature by flipping the Senate from the Democrats and retaining control of the House. Whether or not that effort is successful, it could be a pretty big bellwether for 2024 because Virginia is a purple state. And of course, if he does indeed have success in getting more Republicans into the Virginia legislature, he could ride that momentum potentially. There's a lot of murmurs about a presidential run of his own. And then finally, the other one to watch, Kentucky gubernatorial race, in which the Democratic incumbent Andy Beshear is in a really tight race with his Republican challenger, who is trying to make this about national issues and tying President Biden to Beshear. And it's going to be a real tell as to how problematic a relatively unpopular Democratic president is for Democratic incumbents in their elections that they're facing.
AMH, we cannot get away from this, can we? The prospect of the sitting president dropping out and the prospect of Governor Glenn Youngkin jumping in.
We can't. We cannot get away from this because, one, poll after poll continues to show that the Republican people think that President Biden is too old. But also, Jonathan, they also don't want to see a former President Trump. When you look at national polls, and we have a story about that in Business Week, but then when it comes to Glenn Youngkin in particular, the donors are courting him. They are desperate for him to jump in. But for him, Jonathan, he has till 2026 of this term to be governor, and then he basically cannot run again due to a consecutive term. He cannot run for due to Virginia election laws. So this matches up perfectly for him timing-wise. If he is able to flip Virginia red, he will then show that he was able to have this huge red wave in Virginia, lead as a conservative governor, and then 2 years before the next presidential election.
Fascinating time.
But many are hoping he can get in now, but it would be very dicey for him at this moment, some say.
AMH, appreciate the update. Alongside Kelly Lyons down in Washington, the two of you, just fantastic, as always. We're about 21 minutes into the session. Let's go through the price action for you. The scores look like this on the S&P 500. Totally unchanged, really. We're down by not even 0.1% on the S&P. On the NASDAQ 100, positive by 0.3%. That's day 8. 8 days of gains on the NASDAQ 100. Incredible run so far over the last week or so. Let's get you some sector price action. We can do that with Bloomberg's Kelly Greifeld.
Hey, well, there's a little bit more action under the hood of the S&P 500 right now, pretty much unchanged on the day, but you have 4 sectors in the green, 7 in the red. You look at what's leading right now. Consumer discretionary having a good day, so too is tech, but we're talking about pretty small moves here. I don't know what's going on with materials. Maybe we can check that out later, but you take a look at the bottom there. You can see real estate down, industrials down 0.6%, and energy really having a tough run of it, now down another 2.3%, really adding up to some of the pain. But one sector, one industry group that's having a good day today, of course, is infrastructure software. Of course, we got those earnings out of Datadog, out of Terex. That sector up about almost 15% year to date. A little bit of outperformance, but you compare that still to the NASDAQ 100, still lagging, John.
Katie, thank you. Up next on the program, I'll get you a sneak peek of the next week or so in the trading diary, and I can tell you within that trading diary, the Treasury this week is going to be issuing a lot of debt on a 3-year maturity, a 10-year and a 30-year. I'll bring you the numbers up next from New York. This is Bloomberg.
There's no discussion amongst me and any of my colleagues about when we're going to start preparing to cut rates. The only thing that's been talked about at all is that at some point, when inflation is well on its way back down, if we didn't back off a little bit, then real rates would be getting tighter and tighter and tighter.
And you know what happens? Everyone starts talking about cutting interest rates. That was Neil Kashkari of the Minneapolis Federal Reserve. Great conversation a little bit earlier on this morning. For the equity market, about 25 minutes into the session on the S&P 500, totally unchanged after 6 days of gains. On the NASDAQ, it's day 8, the longest daily winning streak on the NASDAQ 100 going back to November 2021. That's the price action for equities. Let's get to the trading diary. Here's the week ahead, and a big week at that with tons of Fed speak. Governor Chris Waller speaks at the top of the hour. More Fed speak throughout the day from Williams and Logan. Then we get some Treasury supply. $48 billion of 3-year notes at 1 p.m. Eastern, $40 billion of 10-year notes on Wednesday, $24 billion of 30-year bonds on Thursday. A little bit more to look out for on Wednesday. Disney reporting after the closing bell, and Fed speak continues with Cook, Barr, Jefferson, and the big one, Chairman Powell, a little bit later this week. From New York City, thank you for choosing Bloomberg TV. Good luck for the rest of the trading day. This was the countdown to the open. This is Bloomberg.
financial centers of the world. This is Bloomberg Markets with Alex Steele and Guy Johnson.
It is 30 minutes into the U.S. trading day, Tuesday, November 7th. Here are the top market stories we're following for you at this hour. Kashkari says, we just don't know yet. Minneapolis Fed President Neil Kashkari says he just doesn't know about the Fed rate path and that inflation has to be the guide. So forget Goldilocks, we are all goldfish. The market narrative switches hour to hour, so do economists, officials, and investors. Stocks mixed, bonds mixed. WeWork is a we-bust. The company officially goes bankrupt, the latest a company to suffer from higher rates and a liability mismatch. From New York, I'm Alex Steele with my co-host in, not London, Zurich. Guy Johnson, you're on assignment. You're in Zurich. I expect lots of Zurich presents or chocolates to be sent our way here in New York. But anyway, good to have you there.
I've had lots of time for shopping. I'm sure I will definitely be picking up some chocolate.
Excellent.
I'm just not sure it's for you. I have orders from other people, but now I'm going to have to add yours to that. Look, I think yesterday we were talking about Goldilocks, but maybe we should be talking about goldfish. Because, as you said in the introduction, the narrative seems to change minute by minute right now. Just when we got comfortable with the idea that the Fed was done, that maybe we could start thinking about rate cuts, and that the recent yield spike that we had, who was doing the Fed's the work for it, that all reverses. And I think Neil Kashkari, as you highlight, sort of emblematic of that. But he's not the only one, Alex.
No, it's pretty much everybody. And even when we talk in an editorial meeting about what the question of the day is, it just changes so quickly. And sort of like whatever's in front of your face is what you're going to be talking about that day. That's not really like longer term structural stuff that you want to be investing in. It feels like everybody is having a struggle no matter what kind of market you're trading right now.
Absolutely, but this has been the story for a while, and I also think it's kind of classic change in the cycle kind of behavior, isn't it? Nobody's quite sure what the new narrative is ultimately going to be, what the long-term one is going to be. So you try all the different narratives on to try and figure out which one's going to fit. But the fish story is kind of fit. Well, the fish is the goldfish. The fish is kind of, we're all fishing for something, and I think it probably is goldfish, because we're all just going around kind of trying to work out what works. It doesn't work for that long, therefore we move on to the next thing. Don't hear it from me. This is what Kashkari had to say a little bit earlier on. The Minneapolis Fed president. It's an exclusive interview with Mike McKee, and he's basically sort of signaling that the fight against inflation may not be won yet.
We have to let the inflation data guide us, the labor market data guide us. You know, just to point out the obvious, our forecasts have not been great over the past couple of years, and so we just need to, we're all committed. Everybody on the FOMC is committed that 2% is our inflation target. We have to get inflation back down to 2% over a reasonable period of time. Ultimately, the economy will tell us how much is needed to get there, and I just don't know.
But we just don't know. He doesn't know, we don't know, but he's saying that the message will ultimately come from the economy. I'm not sure entirely that the economy knows the answer to that question. So yesterday it was Goldilocks, but in reality, are we all goldfish? That's the question of the day. Forget Goldilocks. We're in a goldfish market, aren't we? Let's discuss this. Mike McKee in conversation with Mr. Kashkari. Edward Harrison joins us as well. Mike, is that the takeaway? The Fed's not sure at this point. We don't know. That's what you always want to hear from an official, isn't it?
That's what you never want to hear if you're on a trading desk. So you want, if you're on a trading desk, you want a Fed official to say, buy that or sell that.
Yeah.
And that's not going to happen. When I started in this business so many decades ago, I was warned, don't really follow the markets on a day-to-day basis because traders have the attention span of a 3-year-old. I think the goldfish economy really captures it today. The Ted Lasso, every 10 seconds, the goldfish forgets everything. And that's kind of the way the markets are reacting. And the Fed doesn't look at it that way. They're waiting 6 weeks in between meetings unless they have some sort of definitive view from the economic data that they've gotten. But you look at the data, We had 3.9% growth in the third quarter, and now the initial signs for growth in the fourth quarter are that it's going to fall back. We had inflation falling, and then last month the CPI on a month-over-month basis ticked up a little bit. So what is really happening with the economy? If you're in the markets, you want to know right now. If you're the Fed, well, heck, let's wait till December 13th when we have to make a decision.
To be fair, we also call anchors goldfish too. Like, we refer to ourselves as goldfish because you have to tell us things all the time. Edward, what do you think? Forget Goldilocks, it's a goldfish market / goldfish economy?
Yeah, you know, especially at this particular time, and the reason is because we have a dearth of data. I mean, this is one of the periods when we have the least amount of data. The biggest number that we're going to get is the CPI, which is the 14th. So we're going almost a week without data, and so this whole three-year-old trader economy is where we are. But I think the one thing to keep our eyes on, there are two things. One is the fact that there's a certain degree of reflexivity in the market. And the second thing is that we have this interplay from the reflexivity between what's happening in equities and what's happening in bonds. Because what we saw last week was that bonds rallied so much that the discount rate went down enough that we have a monster rally in NASDAQ. You know, we have the biggest consecutive days of NASDAQ up today since November of 2021, so that's 2 years. So we have, a situation in which the Fed made it seem like they could be done, but just by so doing, they've created a situation in which they're going to have to walk that back.
And the problem is, though, the positioning then gets whipped around, and Edward kind of exacerbates that narrative. How long do you think this is going to last?
we goldfish? Are we Goldilocks? Are we squirrels? This is the conversation that we're having today, and sort of how you're looking at all the economic data and how you remember and retain it for investment purposes. To do that, you need to know where the economy is going. So then we go to Federal Reserve Bank of Minneapolis President Neel Kashkari. He also said today that it was really hard for policymakers to get it right, and that maybe they haven't won the fight against inflation.
Everybody on the FOMC is committed that 2% is our inflation target. We have to get inflation back down to 2% over a reasonable period of time. Ultimately, the economy will tell us how much is needed to get there, and I just don't know.
Well, at what point do you think you would believe you have tightened enough or not tightened enough? What is it that you're looking for?
Well, I'll give you some good news, is that core PCE on a 3-month basis is running about 2.5%. And it's lower than the 6-month data, it's lower than the 1-year data. So that suggests that the disinflation is real. If we continue to see inflation numbers of that range, 2.5% or lower on a go-forward basis, that would tell me, okay, we are now on a path back to 2% inflation. But 3 months data is still only 3 months data. And if we see that start to tick back up again, that would tell me our job is not yet done.
Do you think that Fed Chair Powell has outlined some sort of guiding philosophy on where the bar is to cut rates and where the bar is to raise them further?
Well, I think he's articulated very clearly that we're committed to getting back to 2% inflation, right? There's been some chatter amongst economists that maybe we should raise the inflation target. I think he's done a great job saying that is not on the table. We're not going to do that. We're going to get inflation back to 2%, and we're going to let the data guide us. We've moved very aggressively. We've made a lot of progress on inflation. We're not done yet, meaning inflation is not back to our target, and if we need to do more, we will.
Do you think that the bar to cut is still just as high as it was?
There's no discussion amongst me and any of my colleagues about when we're going to start preparing to cut rates. The only thing that's been talked about at all is that at some point, when inflation is well on its way back down, if we didn't back off a little bit, then real rates would be getting tighter and tighter and tighter. And that's real, but that's math.
That's real, that's math. I do love that line. That was Neel Kashkari, Minneapolis Fed President, speaking on Bloomberg TV. All right, now let's turn to Wall Street Beat, because there's definitely a line to be made here. We look at what's buzzing on Wall Street in the world of banking and finance, and today we're looking at the sudden collapse of WeWork. We knew the bankruptcy was coming. We keep getting headline after headline as to how they're going to navigate their office leases as they go through bankruptcy. Bloomberg's Shelley Bastick joins us now. We're looking at WeWork immediately dumping 40 New York City office leases.
And remember, 40, you can put that into context here, because it is one of the biggest areas for WeWork, but they have more than 700, really more than 750 leases when you look at the totality here. So a lot of pain to be seen, even above and beyond. Remember, the bankruptcy allows them to start exiting these leases more quickly than they would have before. Remember, it was just a matter of months ago that they said they would enter this process of negotiating leases, again, exiting leases. Clearly that has been difficult. Clearly those negotiations with landlords have been difficult. So now this bankruptcy process really sets off a wave when you think about how to think about commercial real estate moving forward and the total exposure that WeWork really has. Remember, this is a bankruptcy with $19 billion in liabilities.
Yeah.
So just in terms of the leases and what the bondholders are also owed at the end of the day is a lot of money.
Shonali, you make a really interesting point there. You talk about the fact that the property holders have been pushing back quite strongly, and ultimately that has resulted in the Chapter 11 filing. What does the fact that they have done that tell us about what is going on within the office market, and tell us about the effect that this Chapter 11 filing could ultimately have? Presumably they're pushing back because they've got no other alternatives. There are no other people to fill the blank left by WeWork.
And what's interesting too, guys, if you look at the occupancy that WeWork was posting at the end of the summer, it was about 3/4 of the space was still filled. You could take that however you'd like to take it, but it also was a matter of a company with very significant liabilities here, and let's just say it, years and years of financial mismanagement.
Yeah.
And so had they not taken on all this debt, had they not negotiated these leases the way they did long-term years ago, then would they be in this position today? I think that is up for debate.
Well, I mean, it reminded me when I was reading it on the way in of what we saw with SVB, right? You just have long-term liabilities and short-term, I'll call them deposits, but that's kind of what they are when you have your renting for a week or a day or a month or something. Isn't that just in essence what this is?
Yeah, that was one of the problems. And then they had the pandemic and they had all sorts of other issues. But, you know, later this week we will be talking to one of the rivals, for example, because we have seen some sorts of businesses like this go under or face serious pressure. But we have seen others starting to lean in because there are places that are trying to have more flexibility for their employees. And so are they going to come in and take advantage of this pressure on New York City and other large city real estate and come in and take these leases at lower prices?
Talking of pressure, how much pressure is Harvey Schwartz under right now?
That's my favorite question of the day, Guy. And it's because you're seeing Carlyle really starting to take shape under Harvey Schwartz. I think one thing that is really a bellwether, not just for Carlyle, but for the entire industry, is you have Harvey's CFO saying that no expense is sacred. You are starting to see cost cutting now really take hold at the biggest private equity firms, particularly at Carlyle, which has its own challenges. But this idea of seeing cost cutting starting to take hold in the private equity industry at a time where we are seeing massive pressure on deal making is fascinating, because we may start to see it at other places as well.
But if you have like an insurance arm like KKR, or you have other arms as well, or you have a robust private credit arm, maybe it's not so bad.
Absolutely, and you see KKR really being able to beat that trend in terms of really severe pressures on profit, because they can't exit private equity investments because they have that insurance arm that is helping them. Remember, KKR and Apollo are really the only two large asset managers with a large insurance company on their balance sheet. And by having that insurance company, they're able to make spread when they take that insurance company assets and put it back into debt investments, real estate, what have you. And so Apollo and KKR are really showing up as the clear winners in the private asset industry today in this environment because of those spread-related businesses that they have under their wing.
Great stuff, Shonali. Thank you very much indeed. Bloomberg, Shonali Basak. If you know that cost cutting is coming to private equity, we're in a very different place than we were a little while ago. The golden age maybe has finally come to an end. Let's talk about where we are. European markets coming into the end of the day. Here in Zurich, the story has been about one stock. That has been UBS. The stock rallying quite early on this morning. Basically, the message coming from UBS today was, we are on track. The integration is on track. We are... Yeah, there are some challenges ahead, but we're kind of delivering at the moment. They've stuck to their 2026 targets. That is a good place to be, I think, from a UBS point of view. I think there was some nervousness about how the integration is going, but we're really not going to know until the full year in February. That's when we get the big strategy unveiled. So today's numbers don't really provide us much. They certainly don't give us much context. Stocks today in Europe, flattish. It's interesting that actually we're getting a bit of a rally stateside. I want to wrap up on the UK 10-year. Hugh Pill today, who is the chief economist over at the Bank of England, in some ways pushing back on what the governor of the Bank of England had to say a few days ago. It's too early to even talk about cuts. Today, Hugh Pill started talking about cuts. Bailey talks again on Wednesday. No, maybe it's, I think it's Wednesday, tomorrow. Is he going to accept that narrative? Maybe it's not too early to talk about cuts. If he does do that, maybe there are a few goldfish, you could argue, at the Bank of England. Anyway, coming up, an old friend of mine, Dan Scott, head of multi-assets over at Vontobel, is going to be joining us. Looking forward to this conversation. This is Bloomberg.